So awesome. So thank you very much for joining here. Just a quick introduction. We're going to be talking today with Raoul Pal, somebody that has become a very important voice in the financial space, specifically crypto, also in just normal investing. Co-founder of Real Vision, and just someone that I've really looked up to for a long time. So I'm really excited to be here talking with you today. Thanks for joining us, Raoul.
I'm excited to be here. Looking forward to this.
Awesome. So before we get started, I think we got to just display a quick disclaimer. So everything here is educational purposes. None of this will be trade ideas and should not be taken as investment advice. So now that we got the disclosures out of the way, we go ahead and kick off this discussion. So Raoul, can you just give a quick background on Real Vision, just so we kind of level set the audience, who Real Vision is and what you're trying to accomplish?
Yeah, so Real Vision was the culmination of my thinking about the financial crisis and the aftermath, the European crisis, and wondering why so many people got hurt by it, and realizing that financial media hadn't done a good job. And what happened is many people at the center of the financial system, of which I was one of them, got all the information, and everybody else didn't get the same information. I thought, this isn't fair. This isn't right. So Real Vision's mission was to democratize the very best financial information. And we thought, how do we do that in a way that was disruptive, that nobody had done before? And we just decided the best thing of all, sorry, my video wasn't on there. The best thing of all was to interview the world's most famous hedge fund managers at depth and in length, and the world's best strategists and analysts, and ask them how they did their jobs, what made them successful, what they learned, and what they thought was going on in the world. And that kind of access to information was unparalleled. And so our journey has really been to help people in their financial journeys, understand what's going on in the world, how it works for them, and how they can benefit from it.
Did you ever imagine how influential you would become in the space?
No, I had no idea. You know, I started Twitter in 2014 and I had no followers. Nobody knew who I was because, you know, I'd been writing macroeconomic research and investment strategy for the world's biggest hedge funds. And that's a small group of people. So in that circle, I was very well known. Outside of it, nobody knew who I was. And then I wrote an article called The End Game, which was actually a presentation to a conference in Shanghai one time. And somebody leaked it to Zero Hedge and Business Insider. And back in 2012, it became the most read financial article in the history of the internet. So there was, I don't know, 25 million people. So that was my first realization, and it's slightly nervous. And I didn't imagine it would become this big, but Real Vision has become quite the thing now.
Yeah, and so full disclosure, we are partners with you on the crypto channel, which has been awesome. So we're really excited to see that continue to grow. Do you mind if we dive right in? Like, what we wanted to talk with you today about is this macro framework that you're developing, this exponential framework. Could you maybe give us a quick highlight of what is the framework and how did you get to this kind of new level of thinking around building the framework?
Yeah, so I'm going to go back a bit and I'll lead you to where I am now. Okay. So I'm 30 years global macro. That's basically what I've done. It's what I love. It's how I live my life. That's, you know, I've run a global macro hedge fund. I know pretty much everybody from the global macro community. I write global macro research. So that's my life. And that life was basically all about looking at the big secular trends, debt, demographics, deflation. Most of these were negative trends. Then looking at the business cycle and figuring out where you were in the business cycle. And generally in macro, you don't make a lot of money in the low volatility grinding up of equities in the bull cycle. You can make some periods from time to time you can make some good money from time to time in commodity cycles and stuff like that tend to be more volatile. But really it was all about recessions, because you had these big macro overhangs that were really scary and they would drive outsized outcomes. So we got these worse and worse recessions, and that's how most global macro people thought about things. So I had been looking at the world, looking at this broken financial system that was still kind of dragging its way through the ongoing debt bubble, and seeing GDP growth getting lower and lower and lower every cycle, thinking, well, what happens when we get to the next recession? Is this going to blow everything up? And what happened at this recession was, obviously we ran out of interest rates in the last recession. You know, we don't have interest rate policy anymore. What we have really is just monetary policy based on printing of money. So we go into the largest recession that any of us will ever live through and will have ever lived through, and almost nothing happened. Yes, the economy was in tatters, people lost their jobs, but in market terms, in the terms that we kind of keep score of this stuff, the market went down for a month and then rocketed up. And I'm like, okay, so this was the stress test of everything. What changed? Why did it not end up with this mass insolvency event that still it's still there, and there's many companies and industries that are incapacitated and remain forever? But what was the case? And I realized that what was going on is the central bank printing of money was actually changing the outcome, and not because that money was, suddenly they print money and suddenly people on TradeStation traded more. It doesn't work that way. And even if you look at the volumes in the stock market, how did this suddenly juice the stock market up? Because the volumes didn't go up. And that made me think that the narrative was wrong. So I started digging into it, and I just started dividing the S&P 500 by the Fed balance sheet. And what was interesting is suddenly the S&P 500 in those terms has basically, it fell sharply in 2008 and then has been trading sideways ever since. But the narrative is the stock market's a bubble. So then I looked at equities versus gold, which should be a good long-term relationship over time. And it is. And equities are pretty fairly value versus gold. So then I looked at real estate, and they all look the same. But they all look like they're going from bottom left to top right. The charts are all rising on the price chart. And I thought, okay, maybe what we're seeing is a devaluation in the denominator, which is not the US dollar, but the value of fiat itself. So what it's telling you, I thought, was that the monetary printing was causing more money in the system. More money means the value of that money is declining, so it buys less of these fixed assets, real estate, gold, crypto, equities. And wages hadn't kept pace with that either. So that was the whole idea, that really speaking, we're not seeing inflation per se. What we're seeing is the value of our money going down. So what are these investments? These investments are they're savings that give you future consumption. So future consumption, you save for it for retirement. So you buy real estate, you buy gold, you buy shares, and you spend it later. Yeah, somebody's saying my camera's not working, but I can't turn my camera on here. It says because the host has stopped it.
So Andrew, can you help us out here to help with the camera enabling?
Yeah, Raoul, try it now. I just made you host. There we go.
There we go.
Much better.
Oh,
We're in
awesome.
town.
And we have great background.
That's my house. That's my house in Grand Cayman. The bar is in Little Cayman. So I'd started to realize we were devaluing the denominator. So for people to get their heads around this, if you look at the chart of the Venezuelan stock market, it goes like this, exponentially up. Turn it into dollars as opposed to Bolivar, and it goes straight down. And that's because the denominator has collapsed. So if that was the case, then I went back and looked at this, and it kind of made sense of all the asset prices and where they were. And so therefore, maybe the equities weren't in a bubble. Maybe we were just trading in this big sideways range where most of these old economy companies, things like G and stuff, aren't really going anywhere. They're kind of zombies, even though they're still huge companies. So I thought, okay, well, what has beaten this central bank balance sheet? Because the balance sheet of the Fed and all the others, the big central banks, have been growing at 15% a year. And there was only two things in the world that have beaten it. So if the value of your money in terms of what you can buy in assets is going down, what you really want to buy is an asset that outperforms the balance sheet, outperforms that. And there's only two. One was obviously Bitcoin and the whole crypto complex, massively, ludicrously outperforms. And the other were tech stocks. So the NASDAQ had outperformed since the bottom of since the bottom of about 2008, it had outperformed by about 350%, which none of the other assets had done. So I thought, well, what have Bitcoin and tech stocks got in common? And in my work on Bitcoin and understanding how to value cryptocurrencies, I realized that how you value them is Metcalfe's law, which is network adoption. The number of people who join the network and the number of connections they have with each other is the value of the network. And we can understand that from Facebook, mobile phone networks, Google, all of these things. And that was true of Bitcoin, and it was a network of money. So it was going to be worth a lot of money. But then I started looking at these Silicon Valley businesses that were driving the performance, Facebook, Google, Amazon, Apple, and I realized they had the same business model. These were all network businesses. So they always looked expensive to a macro investor. Because if we go wind back to, let's say, 2007, 6, Amazon was trading on a PE of 700. And people would say, well, this is crazy. They're worth more than all the booksellers in the world added together. In fact, they're worth more than every book ever printed. This doesn't make any sense. Well, the reason being is they weren't a book company. What they were was a retail network, and the biggest the world had ever seen. So those kind of assets tend to be exponential in price because that's how networks work. You have to actually look at them on log charts to make sense, because if not, everything always looks like a bubble and you miss it all. You're like, I can't buy this, it's gone up like this. It's because we don't understand what kind of business it is. So these are called exponential businesses. And what we're going into a period, and Bitcoin is one of those assets, but we're actually going to a period we're about to see the largest adoption of technology in all recorded history, probably in a 10-year period. Already, Bitcoin is the fastest adoption of any technology in history. So the internet grew at 63% of a year at its first 10 years. Bitcoin's been growing at 113% a year. It's double the speed of the internet. We've never seen anything like it. Hence why the price always looks like it's in a bubble. But we've also got, we're just rolling out EVs, green energy, distributed computing, AI, robotics, genetic sciences. There's a whole bunch of things all happening at exactly the same time. It's kind of terrifying for us because we're going to have to go through a period of change that is kind of warp factor 10. But as opposed to fearing change, which many people do, they turn back and look for the politics of nostalgia, something they can grab hold, they understand, like, gold, that's my answer. But if you embrace the technology, you realize that things with exponential upsides are incredibly rewarding to invest in. And so as a macro guy, my job is to look at risk reward. So the risk reward for me was make a bit of money in a bull market and make 100% return in a bear market. And that was, good use of options, understanding how bond markets work. We don't have bond markets left anymore that trade, really. Foreign exchange markets, I think, are in range-bound markets and will be for maybe another decade. So we don't have the big macro variables. So therefore, and we've now got the central banks that anytime there's downside will print more money. And we know what that does to asset prices. So we've turned the whole skew of the opportunity to buying calls and not buying puts. And the exponential age means that the upside is unlimited. And that is what's so interesting about this period of time. So that's my new macro framework, which is weird for me to be talking about the upside in Google and Amazon and, Cathie Wood's ARK Invest and Bitcoin and being a wild-eyed optimist about technology, as opposed to the pessimist looking for the next dark cloud. But actually, from a macro risk reward perspective, this makes total sense.
It's super interesting. There's so much to unpack in there. Could you touch on a little bit, as you talk about this, you tend to, you pick on a few things. One of them is a lot of the ideas around Bitcoin is this inflation protection. But you also mentioned that inflation is, the dollar's not going away. So it seems to me that you're suggesting that the pace of adoption is going to outpace the pace of inflation. So we can't print as fast as the exponential growth in the technology. Is that
that's exactly it? Because the adoption of the new technology, think of Bitcoin and the crypto world as a new parallel financial system that we've discovered and built. And we're migrating there faster than any of the bad things that are happening. So what's happening is that network adoption of that migration of everybody going, wow, this is incredible, is massively offsetting any amount of monetary printing. They couldn't print it fast enough to offset it. So for example, Bitcoin has been growing. Bitcoin as an asset has performed 213% a year compounded for, since inception. It's no asset in history has ever done it. It's 100 million% it's gone up since it first printed.
Yeah, it's amazing. So I think you're saying it doesn't matter as long as you're on the assets that are outperforming. Is that correct?
That's right. So why do you need the outperformance? The reason being is you're not getting wealthy in real terms. So even though the S&P might be going up, if it's not outperforming the devaluation of the currency, you're actually net not building wealth. And that's, many of us have felt the same way. You bought a house, you've done this, and you kind of feel like you're going nowhere. Why is that? And that's puzzled so many people. And it's because actually your money is falling in value faster. So once you start being able to own these assets that outperform that, you then start building real wealth. And that's interesting.
Yeah, so this is kind of like, I think Michael Saylor talked about this as that melting ice cube. So even in real equity terms, you're potentially just sitting on a melting or stable ice cube at that point in time.
Exactly right. If you're, in a broad equity market, you're just staying neutral. So the ice cube's melting, but it kind of refreezes overnight.
Interesting. And you touched on a variety of these different industries that you're interested in or kind of paying attention to. Can we unpack a little bit? You mentioned automobiles, and you've had some interesting discussions around automobiles and the need to replace globally. Can you maybe dive into an example of whether it's automobiles or metaverse of how this might actually unfold?
The car one's a really interesting one. So I had written an article for Global Macro Investor and also for Real Vision Pro subscribers about carbon credits in Europe. And there's a futures contract, so EU ETS futures. And how interesting it was, because this massive fiscal stimulus that's coming out of Europe is driving towards a green revolution. So they're incentivizing people, but they're also penalizing people via this carbon cap, essentially, that they have to pay for, cap and trade. So I'd started investing in that and realized it was kind of exponential in nature, because everybody was being forced to do it. It's forcing the price of carbon up, etc. And while I was writing that, I was looking out the window in Grand Cayman and looked at the cars, and I'm like, oh my God, every car here is going to be obsolete within 10 years. Because the EU has basically said they're going to get to 65 or 70% of every car sold will be an EV by 2030. Right? 2030 is not that far away. So if you think of rates of change, we're about to go through it. So I'm like, So if everybody around the world is about to change their car, and we were going through a cycle of holding onto our cars longer and longer because people were generally net poorer. Right. And so, because real wages hadn't gone up, so people weren't changing the cars. But now we've got this mass government incentive to do so. I thought, okay, that's interesting. But we knew that kind of Tesla was the only car company doing it. I'll come on to Tesla in a sec, because there's a broader conversation about this. So then I started looking at the price of VW, and they're like a rocket ship going up. I'm like, oh yeah, this is exactly what's going on. So I reached out and actually on Real Vision spoke to the head of innovation at VW and said, okay, what is going on here? He's like, well, you're dead right. Everybody's going to have to change their car. And he said, and we're not in the car business anymore. I'm like, what do you mean? He goes, well, the race is on to build autonomous vehicles. And he who cracks that, or the various groups who crack that, they're probably worth a couple of trillion, because that's the whole logistics industry. And guess what? It'll be transferable to shipping, be transferable to everything. And in fact, Amazon will be delivering everything by autonomous vehicles, and so will all taxis. And I mean, the whole world's going to operate. I'm like, so he goes, this is not a car prize any longer. It's not about selling cars. We're all in the technology business. And he said, and all of this technology is going to get adopted at rapid lightning speed. And he said, and also 5G is rolling out and satellite link. So everybody's getting connected, and your cars are going to be part of the Internet of Things, which is another part of the exponential age, where all the computers are linked, talking to each other, streaming payments as you go through cities. You end up in smart cities. He goes, that's all up for grabs. He said the technology of the batteries is up for grabs, because cars will be the lead, and it'll be adopted by households. It'll be adopted by other industries. So that's going to change too. And that's layering in with solar and wind and hydrogen fuel cells and all of this other stuff. So I'm like, how fast is this happening? He's like, well, it's a race. He said, we are all in a race to win this. And it's getting rolled out by essentially government force and coercion and subsidies. Over the next 20 years, everything's going to be completely different. And I'm like, wow. So car companies now are now technology bets, and they're exponential in nature, because not only are they going to sell cars, but they're going to resell the technology in a number of different ways. Because don't forget, once you create an Internet of Things about all of the cars on the road and they're all talking to each other, you own the traffic system. You now have something you can give to everybody on Earth. So this is why Apple is building a entire AR version of the world in excruciating detail, because everything's going to connect. It's all going to talk to each other, and it's going to tell you all of this information. So a car is not a car anymore. And Tesla, so that's made me think about Tesla, right? So the typical argument from a value investor or a cynical macro guy, as I would say I was, is Tesla, well, it's nonsense. Why is it trading worth more than all the other car companies? Well, let's go back to that discussion we had about Amazon, because Tesla is not a car company. And Kathy Wood was saying this forever, and everybody thought she was mad. But really, that's what it's trading like, that this is a network adoption model business that has the extraordinary upside of cracking autonomous vehicles before somebody else, or whatever it is, whatever groundbreaking technology that they have. Don't forget, Elon Musk is also the guy putting the satellite Wi-Fi in as well. And that's going to connect all of his cars. So I don't know what the outcomes are, but the market is pricing in that this is not a car company. And that makes total sense to me. That's the kind of level of change we're going through, where a car is not a car.
It's super interesting, because we teach, through business school and finance, we teach you to evaluate car companies as manufacturing type products.
With cash flows and everything else, as opposed to network adoptions, which are entirely different businesses.
And you're right. So, just earlier you talked about how the FANGs outperformed everything in the last 20 years. And so what we're seeing is that more and more companies fall into that type of FANG category and have a much higher potential upside than we're thinking about.
That's exactly right. And what we think about, we're humans, we think in linear terms. Mm-hmm. So to explain to everybody on the call, if I take 20 linear steps out of my office here at home, I go into my lounge. If I take 20 exponential steps, I pretty much go around the world twice or something crazy. That's the difference. That's why, to understand these things, you have to put them in log charts. So if you currently take the chart of Facebook, it kind of looks like it's a bit racy. You put it on a log chart, and Amazon, and Apple, and Google, and Tesla, and Netflix, and ARK Invest, and all of these, and they're a perfect, Facebook is a perfect log channel since inception, which shows you it's a network business. And Facebook, here's a business we think we all know. Facebook has basically bought or owns the IP for most of the virtual reality that's coming in the future, which is this metaverse world of virtual reality. Facebook owns most of it. And it started with Oculus. Everyone's like, what are they doing? But when games and platforms and metaverses, i.e. digital worlds, all merge, because there won't be websites. You'll have a coordinate in a metaverse, and I'm building one out for Real Vision right now. If they own that, okay, they have a big shot at that future too. And they've just done another thing, is they're building a blockchain, which is called Facebook Diem. And that blockchain is a stable coin, a US dollar stable coin for now, but it'll be multi-currency, and everybody's going to have a wallet. And then you've got 3.5 billion people connected for remittances, banking systems, DeFi, and shopping. So they can control global commerce, retail commerce, using their network, because they own the money rails. And then they own VR. Okay, Facebook is now looking like a pretty interesting company. I've hated Facebook for years, but now I'm like, oh my God, this thing's going to explode.
Yeah, it's not so much a social media platform and a marketing tool. It's much bigger than that.
It's nothing to do with that. So these technologies tend to go through something called S-curves. And an S-curve is when they kind of peak out their business model. Well, it's either at the point of failure, like startups, it's like, is this going to work? Yes, no, you recover. Or you get these big businesses. And Apple, and Microsoft were great examples. Microsoft was a great example. It went nowhere after 2000. It fell, went nowhere. And that was an S curve. It kind of didn't know what it was doing. And then it discovered cloud. And then it bought Xbox. And those two businesses exploded Microsoft to the next level again. That's an S curve moment. Facebook is going through an S curve moment. You know, everybody's had enough of their data and the advertising model. You know, we've all got off Facebook itself because our parents got onto it. So then we went to Instagram, and now it's overwhelming with Instagram, and everyone uses WhatsApp. And there's kind of, well, what's interesting there? Well, the interesting thing is they've actually made a bet on a future world. And, you know, Apple have gone through this. Many of these tech companies go through these S-curve moments.
So let's touch on the metaverse, because it's really interesting. I think recently there was a concert on Fortnite where the DJ Marshmallow had 200 million attendees. Metaverse is what, a third or 20% of the entire population is somehow involved in that. Can you maybe set the picture of why that's relevant and important, and how these companies are trying to build towards it?
So this, again, I approach it cynically because I try to understand in my framework of understanding. So I turned up my oldest friend's house in England, and his son was 14, and it was a Saturday afternoon, Saturday lunchtime, and his son had a headset on, microphone, in a gaming chair in front of a big screen. I'm like, Daryl, why is Harry playing computer games? Surely he should be out playing with his friends. He goes, no, he is. He said he was out playing football earlier, but now he's socializing with his mates. I'm like, no, he's not. He's on a computer game. So this is my introduction to Fortnite. We'd all heard about it, but what I hadn't realized is these kids are living in it. So there's Harry, the 14-year-old English kid, socializing with his friends from school, the guy he met on holiday who lives in New York, some friends he knows in Spain, somebody else in Portugal, and they're all playing together, talking together, and sharing experiences together. They are trading goods together. So they're showing off the latest shirt that they've got, which in gaming world is called a skin. And they're buying and selling them, and buying and selling stuff that gives them status, much like we all did at school and we all do today, you know? And I was like, oh, I get it. I'm just far behind. I hadn't realized that these guys have crossed into a digital first world where it's normal. So then I started doing some work into this and realizing obviously how big gaming is, and that DJs were holding events in it. And then Travis Scott had a big event where I can't remember how many it was, 20 million people turned up for that. So I'm like, okay, so they figured out that it corrals eyeballs of young people. You can host events in it. Young people can hang out in it. Then a lot of these crypto companies started building out spaces as well, because what you're creating is you can own these things digitally, like these skins, but you could also own digital property. So I was trying to get my head around this, and I did some great interviews on Real Vision about it and how big this is. But really how it cemented for me is I was talking to somebody about some website, and he's like, oh, you need to check out this NFT site. I'm like, sure. So he sent me a link, but it wasn't a link. It was a coordinate in a metaverse called Crypto Voxels. So I click on it, opens Crypto Voxels. It gives me an avatar, a temporary avatar, and I'm in this NFT store, which has got live music playing, videos playing, these NFTs I can shop for. And there's also some records I can buy, music going on. And I'm like, oh my God, that's the end of websites. These are 3D experiences of brands and shopping spaces. Then I started thinking, well, if we can all construct this, then why would TradeStation, for example, have a platform? TradeStation should be able to give you the widgets to build your own trading screens in your metaverse, where you could have your Real Vision stream going on. You could have your research piling up on your desk. You could have your Twitter going on, and that's a world. So platforms have changed too. And then you realize that all these business models, everything is going to this digital world. And it's gigantic. And it's the mix where gaming, crypto, technology, and the future all come together into this new world. And I think it creates entirely new GDP, because people are now earning money in this metaverse, doing roles. I've just commissioned an architect firm to design a premises for Real Vision in the metaverse.
No
And
way.
we pay them in ETH because that's the money of the internet, not Bitcoin, ETH, interesting enough. And so you're paying architect firms to build you the premises, and designers, and you can have furniture designers, and you pay them for it. And because it's a space that we will use, and we can drive people there instead of our website and say, come and check out Real Vision's world, you get a better feeling of the brand. Well, of course you'll spend money on stuff like that, because that's going to get the eyeballs and it's going to bring you the attention that your brand deserves. So yeah, it's gigantic.
And I mean, it's such an interesting thought, because instead of having a brick and mortar shop, you're now in this virtual world where you can, it's beyond just a website, you can interact with a large population of people. Can we touch on a little bit around?
Yeah, sorry, James, there's no limits, right?
Yeah.
In that world, there are no limits, because you can connect anybody anywhere, and the rules of Earth don't apply.
Yeah. It's such an interesting marriage of our physical and virtual worlds that are coming together, where, you know, the idea of a lifestyle brand really spans beyond just what I wear. It's definitely into this metaverse area, and this generation of people around the entire world that are living in both places are definitely going to drive this world of commerce and fashion and news and just interaction. It's quite impressive.
Yeah. So let's go back to that Facebook conversation.
Mm-hmm.
So now let's say there is a music concert in 7 years' time, as opposed to figuring out how do you get to New York, where you're going to stay, because it's, you know, at Madison Square Gardens. You'll put on your VR headset. You'll have either your avatar that you choose to use in that metaverse, or a digital representation of yourself. And you will then be able to see who's alongside you. You can have your friends with you. You can invite your friend who's in India, and he can come to the concert with you. You share the experience together. You see it in real time together. And, you know, that's what's going on here. And you're buying stuff, you're sharing experiences, and none of it is in the physical world. And, you know, this is why when you see what Apple's just doing, they're building 3D renditions out of 2D photographs. And they've just built this all technology because they're building out all the AR stuff as well, because everybody knows that this is the next phase of everything.
So we're building towards this sort of digital world. Companies are shifting their models to become more platform or data type platforms. How does crypto fit within this world? Because we've laid the foundation that there's a huge growth. Now, does it exist? Does it not exist? Where does it fit?
So crypto is the answer to how to connect these worlds, right? So right now there's Fortnite, and then there's another Minecraft, and then there's Decentraland, and then there's crypto voxels, and those things are all separate universes. So therefore my goods in one don't have value in another. That's like me owning a t-shirt here in the Cayman Islands, and I come to see you in Miami, James, and my t-shirt's now, I can't go across the border with it. But that's what's going on currently. Mm-hmm. What crypto does is allow an interoperability of value. So we can exchange value in all these different worlds. So I can go and earn money in Minecraft, transfer it and buy something in crypto voxels, create a business in crypto voxels, spend it in Decentraland, or create an investment, and it's all fungible. It's a world where we can interact across. And the crypto rails allow that to happen, because what crypto does, what blockchain does, it attaches, particularly in the digital world, something digitally with a trusted, secure ownership and transferability. That's what makes the whole thing work. So these are all these technologies, which is why this exponential age is not about a bunch of individual technologies. It's a bunch, all of these, all knitting together. So if you think about metaverses plus AI, where does that lead you to? Who the hell knows? So imagine the metaverses plus AI plus genetic sciences. So you can put all the great scientists in the world together, working on a lab where they're not physically together because laws don't allow them or borders don't allow them, in a lab together, using AI to enhance it, and robotics, and none of them are together. I mean, what is possible? We don't know, but outcomes are exponential.
So unclear, but definitely something that's on this exponential path that we can't really quite see. One of the folks is asking if you have any like social platforms or tokens that you are focused on or interested in or have caught your attention recently.
Yeah, so my two bets, my macro bets outside of ETH and Bitcoin, and then I got a basket of stuff, a mix of DeFi, a mix of interoperable stuff, just bits and pieces that I don't really know. I've actually taken some proper macro bets now. Now I'm trying to get familiar with this space, and I kind of think I know where it's going. My two bets are metaverse and social tokens. So metaverse is things like Decentraland. So there's a bunch of tokens based on some of these kind of things. Decentraland's the biggest one, but I can't remember. I've got a list of them that I've bought a basket of. But if people look around some of that for some of those kind of tokens, that's interesting. But I think this is really early. So these are next cycle stuff. This is not sure, if we are in a crypto bull cycle, they'll go up a lot. But really, these are to hold over the next 10 years, and you'll have to keep on top, which ones are getting network adoption, which ones aren't. Social tokens, this is an even bigger thing for me. Well, not an even bigger thing, but another massive thing is social tokens are, I think, the business model of the world changes around community, as opposed to businesses that sell products to communities. What's happening is communities are interacting with each other and with the businesses and the businesses themselves. The easiest way to describe it is take a music artist. Take famous music artists. They lose 80% of the economics of what they do to middlemen. And they don't speak to their audience directly until they're in a live event, because their music's sold on Spotify or streamed. They sell tickets through Ticketmaster. They have to use advertising platforms on Google and Facebook. So somebody owns their IP rights, the record company does. So they lose everything. But once you create community around artists, which is fans, and you say, you're going to share in the economics of this, and let's create a network out of the famous artist, and you're going to get a token, and you're going to be able to exchange that token for tickets, and we're going to create tickets, NFTs for concert tickets, and we're going to create special events. And now I own my community. I can service that part of the community who can pay more with really exclusive product that they'll pay a lot of money for. And for the people who can't, I can service them with this kind of product. And the community members who own the tokens benefit as the token grows. So if you have a hit success, a hit album, a big tour, the value of the token is going to go up. So everybody's incentivized to grow the exponentiality of that artist. So therefore, you've now got individuals as part of this community who are going on TikTok, making videos of the artist's music in the hope of driving virality. So your audience is now working for you to increase the value of your catalog, your music, and the community itself. It's amazing. And that's going to happen. I mean, Real Vision will end up building a token for itself. And I think most business models will coalesce around community because it's a better way of working, because you align yourself. So right now we have Facebook has their community, which uses their platform to speak to each other, but has no relationship with Facebook really. And then you've got Facebook shareholders that take the economic benefit of that network effect. None of these people share the benefit. In the model of where Bitcoin is a classic example, where the owners of the network benefit from the network and the users of the same thing. We're all the same thing. That's why it's being adopted so fast, because adoption effects drive the value of the money up. So we all get wealthier. So it's genius. And that's how I think all communities are going to go, and all businesses will head towards community.
It's definitely a hot hire role for many companies now, is that sort of community developer, someone that can come in and actually help to build these communities. So I definitely agree with you. Can we, we spoke about a lot of super interesting things here. Maybe let's back it up a little bit and say, what can somebody do to gain exposure to some of the things that we're talking about? How can they get involved, and any ideas or direction of what they should be looking at or could be looking at?
So I would say that, what is the probability that these giant tech companies don't get the next phase of the internet right? I think it's pretty low. From what I've told you, what's going on is begrudgingly so. The FANGs probably continue to be huge. So, there's some pretty safe bets to have in that. I like the fact that everybody hates Kathy Wood's ARK Invest because they're jealous of the performance. And, she's got illiquid stuff in her portfolio, but she's nailed every one of these exponential themes. So is she going to get every one of her bets right? Probably not. But is that a good proxy for this idea? Sure. So I like that too. And then in crypto land, you're going to have to learn that this is a world where these are like VC bets. Some things are more mature, like Bitcoin, and some are really not mature, like Decentraland. We don't know if it's going to succeed or not. So we have to have risk weightings. So we need some breadth. So we need to build a basket of stuff. And so, when you get down to these social tokens like Rally, is that platform going to work? Well, we don't know, but we can watch it for, okay, who's building on it? Who's creating stuff? How many people are using it? And then, we can weight accordingly. But the great thing is, if we had an equally weighted basket, much like a VC would do, if Rally does really well and 3 of them go to 0, Rally's going to just compensate. You don't even need to readjust your portfolio. So you can build this nice broad portfolio of stuff. Sure, trade around it, buy some other stuff. But you've got a buy and hold strategy at core around that. And then you can layer in some of these equities that cover most of this. And you've got it pretty much covered pretty straightforward. Now, then around that, business cycle does matter. The dollar goes up today and a bunch of things break. So you can then trade around hedging your risk. You can buy some puts, when you think that the economy is going to be weaker or the narrative shift's going to come. So tech stocks tend not to do well when bond yields are going up. So that's been happening. Bond yields are coming down. Suddenly tech stocks are starting to take off again. So you can hedge your interest rate exposure. So you can fine tune your portfolio to get some of these risks out. And then you've got a pretty good setup for 10 years.
I think that's super interesting. And as you've gone down this sort of thinking about how to develop that portfolio, has anything surprised you in the conversations you've had that like maybe thought either validated or took away from that idea of your kind of?
Yeah. So what I've found is the world is very split. Most traditional finance people hate this idea. They just think you're being optimistic. This time is not different. You'll see, it's all going to blow up. These things are hugely overvalued. This is a bubble. It's all tulips. You're an idiot, right? That's pretty frequent because these are not measurable, not value. You can't value these businesses on cash flows, which is the antithesis of the Graham and Dodds. And this is how we do things in this world. And if you don't understand, Sonny, you're going to get poor, right? The Warren Buffett technique. And so people hate it. And then what was interesting is I wrote it all up in Global Macro Investor First. That's what I do all my really deep thinking. And that's, my subscriber stats, it's a really expensive research service. And it's the world's biggest macro hedge funds, family offices, sovereign wealth funds, these kind of people. I wrote that article, The Exponential Age, and said, listen, I'm changing my macro framework for the first time in 30 years. Here's why, and here's how I think about the world. I cannot believe how many people reach out and said, oh my God, that's dead right. These are people who've been in the macro world for 30 years, 40 years. They're like, this is 100% right. We're all going this way. So I was shocked how many macro greats that I knew had basically given up on macro and gone to crypto because they said, this is the new macro. But when I wrote about the technology and the understanding of the exponentiality of technology and how it's going to work and how we can think about valuation, they're like, now I understand valuation. I can fill my boots with this stuff because this is where the world is going and it's easier to make money as opposed to how hard it is to make money when you're fighting, interest rates that aren't going to go anywhere or currency markets that don't have any volatility. Where's the alpha? And then suddenly this is like giving them, oh my God, this is the big opportunity. So it was interesting. So the traditionalists generally can't stand this whole idea. And then the guys whose job is to make money out of whatever environment, which is really the macro hedge fund guys, are like, this is everything. So fascinating.
Yeah, that's super interesting. I know even our conversations have changed from trying to convince people this is a good idea to really they're banging the doors down. Like, we need to figure out how to deal with this. And it's just such a the last 2 years have been such an amazing shift.
Yeah, because even you guys building out the crypto part of what you do, at first you have to convince people that this is real, and then you get the traditionalists push back. The mean reversionists say, yeah, but it's just a bubble, and you're now abusing your access to people, and you're forcing them into a bubble. And you have to try and just say, listen, this is actually a whole new world. It's not going away. It will have its ups and downs. People will make vast money and will lose money too, and that's okay. But this is the new world, and eventually people come along.
Yeah, no, absolutely. I'm going to go ahead and wrap this up because I've taken more of your time than I had booked. But is there anything that you want to leave the audience we have with? There's one question actually, if we can ask.
Yeah, go for it. Ask some questions.
Do you think traditional banks will become a thing of the past? And if so, what do you think they look like in the future?
I think money center banks will be the thing of the past. I think the central bank digital currencies plus DeFi is basically the end of the money center bank. To have some small high street bank in the middle of Ohio just makes no sense. It's a terrible allocation of capital. Investment banks are not going away. Two things. Firstly, they understand all of what's going on around them. They're all building out crypto infrastructure, rails, everything else. They understand DeFi. Of course, they'll try and slow it down as much as they can, but they understand it and they will be on it. But also, they also serve another role, and that's M&A and other parts of the business that we can't disrupt via technology so easily. So they're not going away. The money center banks are, and I think it's going to be based around our wallets. When we all have digital wallets, we all use some digital wallets, but that's not seamless yet. But it's coming, and you'll have your Apple digital wallet, and I can have everything on there be encrypted, and it'll be super secure. And within that, I'll have my savings products, my investment products, stuff I've bought, my NFTs, my passwords, my TradeStation account. The whole lot will be in the same place, and it'll be accessible by my fingerprint and encrypted. And that's where it's going. So the banks are nowhere and everywhere. They're just somewhere in the internet.
So do you think what do you think happens first? A traditional bank buys a big crypto firm, or a crypto firm buys a traditional bank?
Crypto firms will buy traditional banks for a reason, which is they want the banking license because it gives them access to US dollars, because we still live in a US dollar world. So that's not going away for the time being, and I don't think it'll ever go away. The central bank digital currencies will make it easier to have the onboard on-ramp and off-ramps. As long as we live in a society that has a fiat currency, we have to use that fiat currency for most of our expenditure, and I get it. Banks buying crypto businesses, problem is they can't afford them now. Because these things are being priced for network effects. So, these are $100 billion plus businesses. So good luck anybody who wants to go and try and buy Binance. What's the price? It's bigger than most banks are now, because it's, again, exponential network effect business models with an unknowable, massive upside future, because they don't have to stay as exchanges. They can be, we don't know what. So that is richly valued. So there's not many banks that can afford to spend 200 billion on Binance.
Yeah, I think this will be very interesting, and people will perk up when something like a Binance buys a BlackRock, something massive like this, and it's just going to see that.
But I don't think they need to. So I've been looking into this. I think you can spin up asset management products on tokens for nearly zero cost. And that is incredibly disruptive, because BlackRock have a strategic advantage. They have all the capital in the world to be able to negotiate with the various regulatory authorities, have the people set this up, do these things. They're expensive, but they have a distributed sales force that's massive, and that therefore they can recoup their costs. So it's really hard for anybody else to get a look in. So, there's people like Van Eck who'll fight all day to get their share of this, and they're a smaller player. But in this space, the costs collapse. So then it's open to anybody. He who owns the distribution wins. Now, distribution these days is anywhere from Reddit to Twitter to your trading platform to a media company. It can be everywhere and nowhere. So again, game gets very interesting. So the more likelihood is, I think, is that they don't buy an asset management firm, that they become asset management firms. and the asset management firms panic.
Yeah, that makes a lot of sense. Because you're not only your exponential value increase, but you're also exponential cost decrease.
Yeah, exactly right. Yeah, it turns asset management into a SaaS business model as opposed to a low margin, high volume product.
Yeah, wow. Wait till VW becomes a asset manager. So one question, when you're talking about these virtual spaces, there's a question from the audience around shopping centers. Do you foresee them kind of fading away? Do we still go to physical shopping centers?
Yeah, so go back to, again, I'm learning all this stuff because my mind is now open to it. Go back to what I told you about Apple and AR. So they've got, and you see it on Twitter, you see it in various Apple things. They've just had their big conference and they've got like perfect 3D renditions of sneakers. Right. They're also creating avatars of yourself. So I can take perfect 3D avatar of myself. With my dimensions, I can try the sneakers on. I can try any clothing on. And I don't even have to be in VR. So I don't have to have the headset. I can do it in augmented reality. And I can go with my friends because we've talked about that already. I can go to a concert with friends digitally. So now I can go shopping with my friend in England to go and buy jeans on a Saturday afternoon and have a chat. And I don't have to leave my house. Why would you want to go to a mall? It's ridiculous. It just feels odd now because we're used to this, the physical texture of stuff. But Amazon's kind of proven, particularly in big cities, that doesn't matter because they deliver it to your house and you send it back the next day. So it's highly convenient. And COVID accelerated that, people's understanding that really you don't need a store. The only thing you really need a store for is because you want to go for a nice walk, in which case go outside and see nature instead.
Yeah. So do you think they become distribution centers, or we have all these malls? What do we do with them?
At some point, they'll be worth nothing and you'll knock them down and build housing.
Yeah. Makes sense. It's a question around schools.
Somebody's actually saying, where does it end? Schools.
Yeah.
Schools are going without question into the metaverse. It's a much better environment for kids. They find it better. So this has already been experimented over COVID. There was a teacher who couldn't get his class together, finding it was distracted, couldn't do it on Zoom. So he said, I'm going to do it in Fortnite instead. So he found a space in Fortnite. He found a window, a dirty window in a disused factory in Fortnite and started writing on that as his blackboard. The kids loved it. So he did this whole summer course in Fortnite. And I'm like, and there is the end of universities and schools.
Yeah. Yeah, because you can learn from the best professors in the world just going on Fortnite.
You can be in Ethiopia and have the same education as the kid in Manhattan with the best teachers in the world. And the best teachers in the world are not who you can hire locally, but who you can get distribution rights of globally. So teachers become rock stars. There'll be teachers getting paid $10 million a year because they can engage kids at scale and get results. Phenomenal.
Yeah, that's amazing. I mean, really just, it's like mind blowing to think about how we're going to change education and keeping them in the games. Like we've been trying to figure out how to gamify education for a while, and it's not an app on your phone. Getting into a Fortnite space is amazing. Yeah.
And then they can go and play in Fortnite. You know, they get the break, they get the reward, you know, they can go and hang out, then they have to come back. You know, it works for them. It just doesn't work for some of us because we went to a physical school and we played in the playground, but that's not what 10-year-olds do now. They don't do that.
Yeah, or this goes back to your earlier point. Don't be afraid of the change. It's coming. We just need to be open to it.
Embrace the change because it is our future. Whether you like it or not, it's not going away. So you can either complain about it or you can embrace it. And if you're into investing, why not make some money out of it too? Because the pace of change is where you make all the money. So, you know, and I just saw a question come up is, how long does this take? You've got to understand exponentiality. It goes like this and then like this. So where are you? Well, the crypto curve is on the steep acceleration. I think there's 126 million users of crypto. If we just extrapolate the the internet's rate of growth, 63%, which is half the rate of growth of crypto now, we get to 1 billion people by 2024. Right? 126 million, 1 billion people in 3.5 years. That is what I'm talking about here. This whole stuff I'm talking about, in 10 years' time, you will look back and go, oh my God. And in 20 years' time, it'll be an entirely different world.
Yeah, the whole world is changing. One question that I did get from someone prior to this is about the laser eyes. Are you going to do the laser eyes?
No. And I've learned this. I've been around financial markets a lot. And the expression I use is people suffer from ego hubris. And usually when you think your shit smells of roses, you're about to get your face rubbed in it. And I've learned that many times. I'm like, I can do no wrong. Look at me making all the money. I've got every trade right. I've figured it all out. That's when you start losing money. And so I have learned not to have hubris in my investments. So laser eyes to me was kind of this collective notion of we're all going to win and get rich and crypto's going to 100,000, lock it in. I'm like, once you start thinking like that, you're exposing yourself to the downside. And guess what? That was exactly the peak in Bitcoin.
Mm-hmm. Interesting.
To the day. I wrote the tweet about it saying, listen, guys, this is not cool. This is exactly the kind of hubris that marks tops. It was exactly the tops of the day.
Wow.
As was the Coinbase IPO.
Yeah. So anything that you'd like to leave us with before we wrap up? Anything that we didn't ask or any final thoughts that might be interesting for the audience?
I think, okay, I've given some really big ideas. What do you do with them? So crypto, it's had a big correction. What do you do? Well, it depends your strategy. If you're trying to build a long-term position, dollar cost average, just keep buying. Use it. The dip is your friend because it doesn't revert back to zero or something. It always reverts back to a price that's higher than the all-time high. So this trend is ongoing. So just keep going for it. You'll have opportunities to put more capital to work. I don't know if it's the time right now to press your bet, but it's the time to add to your positions. Then start thinking about that basket and how do I go out on the risk curve and get to learn some of these things, take some of these bets. And that same strategy should apply to this exponential age. It's not today that it's going to make the difference. This is not a single day trade. This is a buy and hold strategy you can then trade around. So again, start averaging into this stuff, doing your homework, learning some of this stuff, figure out what bets you want to take, and then, use sell-offs as your friend, because sell-offs in a logarithmic trend generally lead to another huge bout of upside. And they tend to mean revert to their exponential moving average as opposed to the commodity markets. We know what lumber's going to do. It's going to go all the way back down to its range, right? That's mean reversion. Logarithmic trends and exponential trends don't mean revert. If they do, they mean revert to that log trend. So just look at those things and start accumulating this stuff and keep an open mind. And remember, you can also hedge risk out different ways. So, that's when, getting to learn a bit about using options or some futures that can hedge against some of the risks, pretty useful. And that's why, TradeStation is so useful because you cover all of this stuff, right? And it's very useful to be able to construct this long-term portfolio, be able to trade around it, layer on your derivative needs, that kind of stuff. It's super useful.
Awesome. Thank you for the plug, Raoul. How can people follow you on Twitter and connect with you on Real Vision?
Yeah, so on Twitter, I'm around all the time and I'm pretty responsive. I like to reply to people and get involved in the conversation. It's at Raoul, Raoul GMI, which is Global Macro Investor, my research business. And look, check out, everybody here is a crypto user. Just go to realvision.com/crypto. TradeStation are kindly sponsors, but kind sponsors of the channel. It's amazing content. And it's free because of our partnership with people like TradeStation. So go knock your socks off, go and use the content, enjoy it, and it's all there for you, and it will help you navigate this whole world.
Very well said. It's definitely some of my favorite content. So I really appreciate you taking the time, Raoul, and thank you so much for spending time with us again.
Not at all. Great to see you, and awesome. Thanks everybody for coming along.
Thank you. Thank you.